What's up, traders? Welcome back to the channel. Welcome back to LiquidFX YouTube. Here we're going to be going over a topic which I guess will be useful to people. It's something that I've been asked in the comments and I've been asked as part of the private mentorship is what time frames do I use to trade? What time frames? Where do I start? From higher time frame down to lower time frame. So I've made videos on how to build a bias. So some of the things we discussed today will coincide with that video, but this is going to be specifically on time frames and which time frames I use, what times of the week, what times of the day, and how do I go about it. So first we have in front of us here the GBP USD chart on the weekly time frame. Now, I don't look at the weekly time frame every single day, but it's good to take a glance at it once or twice a week just to see where we are in price, right? Just to see our overall um, higher time frame trend, almost from like an investing perspective, right? Which direction is this market actually moving? Now, of course, it's pretty obvious to see it's been moving down and it has been moving down for years, ever since the financial crash. So we're at a position now where you're going to ask yourself, well, LiquidFX, what do you do from here, right? How do I use the weekly time frame to my advantage? Well, here's how we do it, right? The first thing we want to understand is our structure, right? I've made a separate video on all these concepts of structure, fair value gaps, and PD arrays, so we're going to be doing that very briefly. But the weekly time frame serves a purpose, right? It represents the higher time frame, the very higher time frame narrative, right? It lets you know where you are in price, and that's very important to understand. You want to know where you are in price. Where are you in price? Okay, so if we look over here at our most recent structure, right? If I just draw that out so people can understand, we have a bearish structural dealing range, right? And from this high, right, this high over here down to this low. So that's the first thing you want to do, right? So the first thing you want to do is you want to look for your weekly structure. So we start on the weekly time frame, right? We start our analysis on the weekly time frame. Start on the weekly time frame, right? The first thing you want to do is you want to identify your most recent swing high and swing low, right? So you want to get your high and low, the most recent high and low, swing high. The only reason why you need one of them is because the weekly time frame is massive. One candle is obviously a week, and it takes a long time for weekly trends to actually form. It takes years for weekly trends to form, right? So only one high and one low is fine. So that's the first thing I'll do. The second thing I'll do is I'll mark out my fair value gaps. Where are the inefficiencies in price, right? So FVGs for sure. Where are the inefficiencies, right? So if we just zoom in price over here, again, we're on the weekly time frame to commence our analysis. What we see over here is we see a fair value gap here in this region over here. So this is our first fair value gap over here that gave a reaction. All right, so this is a weekly POI or simply an inefficiency area. So this is our first zone over here. Now our second POI or our second fair value gap is way up here, right? It's way up here. And this is our weekly POI in deep premium. So to ask yourselves, people ask me LiquidFX, where do you start your analysis? Well, we start on the weekly time frame, of course. We start on the weekly time frame, and the reason for that is just so we know where we are in price. So let's answer that question. Where are we in price using the weekly time frame? Now, this is live GBP analysis as well. So for those who trade GBP USD, here's some free analysis for people. What we've seen over here is we've seen this fair value gap in this region, right? What we've seen is we've seen price react to it. But has there been a successful follow through, right? Has there been a successful follow through? The answer is because the low is over here, no, we've not had a successful follow through, right? So this is an unsuccessful follow through, right? So no follow through over here, no follow through, right? So this tells us that what does this make this high over here? What high is this? This high over here. This is now classified as a weak high, a weak structural point, a weak high, and therefore we target this. This is a targeted high. A weak high is a targeted high. Now, from the from the weekly time frame, we understand our overall very high time frame narrative. So what we want to understand is that yes, we're bearish in terms of our structure, but we're at a zone where price could look to rebalance inefficiencies all the way up to here potentially, but we have a weak structural high over here. So what does that tell us? That tells us as traders and as analysts, more importantly, as higher time frame market analysts, we should be looking for buys simply because we have a weak structure over here, right? So this is a general narrative of GBP USD to sweep this high and to potentially go all the way up to the POI and marked out, which is over here, right? So this is essentially how we start our analysis, looking at the weekly time frame. I made separate videos on structure and POIs and fair value gaps. Please have a look at those to aid your understanding. But this is simply on time frames. We start on the weekly time frame, okay? Now, from the weekly time frame, you can probably guess what time frame we go down to next. It is the daily time frame. The daily time frame will look awfully similar, and it will sound awfully similar what I'm saying in terms of market structure, right? Because we start with market structure. So what we've seen over here, we've seen very simple market structure to map out, not too difficult. We've seen price come down, so we saw price make a high in this region. We saw price come down. Now we've seen price come up, creating a high, low, high, low. So we had bullish structure that's now shifted bearish. Okay. So now we need to understand where is our dealing range. The same as we did on the weekly time frame. So the same concepts from the weekly time frame are applicable all the way down to the daily time frame. So there's the same concepts. So if I just write that out over here, we want to start on the weekly time frame, then go to the daily time frame, right? So weekly, then daily. Okay, so if you want to put anything in your notes, it's this: weekly, then daily, because this is what people have been asking me. So now we want to operate from our swing high and our swing low, right? So just from the chart, from a basic structural perspective, right, we've seen a break of structure over here. This represents a new low forming in the market. So we use our Fibonacci tool or our Fib tool or simply the premium and discount tool, right, to give us our PD array. So this represents our PD array from the swing high down to the swing low. It's very important you get this right. It's from the swing high all the way down to the swing low, okay? So we're just going to make that on the daily time frame, right? So we started on the weekly, we've come down to the daily. Now, what does a daily time frame paint, right? What picture does a daily time frame paint? Okay, it's the same as the weekly. This is no surprise. We have a fair value gap over here. So if I zoom into price, we can begin to dissect how we're going to choose our candle, right? So the fair value gap candle on the daily or on any time frame is the last candle prior to the imbalance, right? So we see an imbalance over here or a fair value gap. We choose the candle prior to that, and that's going to be our POI or our area of interest or whatever you want to call it, our fair value gap, our daily fair value gap, okay? Right, cool. So now we're going to just drag that across, and that's going to be our daily POI of interest, right? So point of interest is a POI. So what we expect from this is we expect here again an overall bullish narrative in price. So we're using the weekly and the daily to frame a bullish narrative, right? We started with the weekly, we came down to the daily time frame. Excellent, okay? So that's exactly what we expect, right? That's exactly what we expect. So we want to follow a systematic approach when it comes to our time frames. So again, the analysis here on GBP USD, just the higher time frame analysis would be to see something like this to mitigate this daily POI, then we could see a bearish reaction, or price as well within its rights to come down lower, mitigating a POI over here, filling this fair value gap over here before continuing higher, right? So how have we used the daily time frame to inform our analysis, to inform our bias? Right, we've used structure and we used fair value gaps and we used PD arrays, okay? So we have a fair value gap up here, but we also have a fair value gap down here as well. This is a daily fair value gap as well. Okay, so with that being said, price could mitigate this zone and continue higher as well. So we've got two potential narratives, okay? Understanding we're aiming for premium, but we could head down into discount before we do that. Okay, so if we just go quickly back up to the weekly time frame, the weekly time frame pointed the same picture where we have a weekly POI all the way up here, okay, and a weak structure over here. So this is how we're painting the picture from daily, from weekly down to daily. Now let's go down to, you guessed it, the next time frame, which is a 4-hour time frame. Now the 4-hour time frame uses the same concepts as a daily, but it's a little bit more refined for intraday trading. Here's how we do it. What we've seen over here is a bullish structure. We had a very rangy start to the year. This is probably the toughest forex pair to trade, or one of the toughest forex pairs. What we've seen is a structural high and a low. So if we just look at our most recent structure, we've seen a low, a high, a low, a high. Then we had a break over here, breaking out this range. Well, not really. We still stuck in the range. We went back into the range, and now we've had a break. So if we just, let's dissect our structure in a bit more detail. So on the 4-hour time frame, what do we look for? Well, we look for POIs, right? We look for fair value gaps. Just like the weekly time frame, we look for fair value gaps. The one that sticks out here is very clean and obvious, very clean fair value gap on the 4-hour time frame. Very, very clean 4 hour fair value gap. So this is the 4 hour FVG, a 4 hour fair value gap. This is what we use for our intraday trading, right? So we can reasonably anticipate and expect a reversal from this area, and that's exactly what's happened over here. But how have we framed that, right? How have we framed that? So remember we started on the daily, and the daily has fair value gaps above us that we want to target. This is our daily fair value gap. But the 4 hour fair value gap is used as an area of interest to propel higher prices, right? So we look here for higher prices. Look here for higher prices, okay? Look here for higher prices, right? Because this is a 4 hour inefficiency. So notice how we're using all the time frames in conjunction now. Yes, we have a fair value gap up here on the daily, but we can't just buy. We need to look for areas to buy off, right? Liquidity pools to liquidity pools, fair value gaps to fair value gaps. Now, just from this time frame, we can identify one other thing, which is liquidity. We have a massive pool of liquidity in the form of a trend touch, two touch, three touch, four touches, right? So this is a huge liquidity pool and a huge trend line that price will inevitably look to target at some point. Okay, so this is a massive liquidity pool and this is a massive fair value gap that's been left over here. Both of them are used from the daily time frame down to the 4 hour time frame to build our narrative in price. So our narrative in price is essentially we want to be bearish first, right? Because we want to come down into a POI, then potentially bullish as we aim high for daily POI above us. So let's have a quick recap on what we've been through. We start on the weekly, right? We start on the weekly to see where we are in price. Where are we longer term? Where are we longer term? Start on the weekly. Now the daily time frame gives us those key levels that we aim for intraday. Key levels. Key levels, right? And our key levels are very typically fair value gaps, right? Or POIs, same thing. Now, when we go on the 4 hour time frame, what we're looking for is our structure. We're looking for PD arrays. And you guessed it, we're looking for fair value gaps as well. So this is how we form our analysis. This is our analysis on the higher time frames. So we've got the very higher time frames, and we've got the higher time frames being the daily and the 4 hour. And these are the concepts that we use, right? So this is how I frame every single trade: weekly, daily, 4 hour. Now let's go down to the M15. So what do we look at the M15 or the 15-minute chart? So I don't use the 1 hour, I don't use the 30-minute, because if you're using multiple time frames, you're kind of forcing a trade to fit what you want, right? Whereas if you keep your time frames fixed and systematic, that leads to a mechanical approach. And that's what you want, more so from a mindset perspective, that you know what to follow and you're less likely to deviate. But if you do deviate, because we're humans, we all deviate, you understand there's a greater accountability when you have mechanical rules. So if we go down now to the M15 again paints a similar picture to the H4, where what we see is we've seen a structural high and a structural low in this region, right? So what we've seen is we've seen a break of this last low over here. So this was our last boss over here. So we've seen a structural break to the downside. We've seen a structural break to the downside, marked out with a break. Now from here, you want to ask yourself, how are we going to be trading this, right? How are we going to be trading this? Now, on the 15-minute time frame, we need to identify our weak highs and our weak lows, or our structural highs and structural lows. Here's our structural high. Here's our structural low. So on the M15, what do we use, right? On the M15, what do we use, right? On the M15, we're extremely reliant on our PD arrays. So we understand that we're in premium over here, and we understand we're in discount over here. Premium and discount. Well, it's one concept really, PD arrays. One of the most important things on the M15 chart, right? So we've gone from now the 4-hour time frame, which we've just done. Now we go to the M15 time frame. Okay, so the M15 time frame, PD arrays, again, very important. PD arrays and structure. PD arrays and structure. Two of the things we use on the 15-minute time frame to get us involved into trades or to keep us away from trades. Okay, here's a quick example of what I mean. Yes, we have a 4-hour fair value gap over here, so we have something to target intraday. We have inefficiencies in price to target. So that's it. The price delivery algorithm will look to rebalance this price action over here. But now that we're in the discount, what we're going to look for, how we're going to frame our trades, is potential buys up to premium to fill this fair value gap over here. So we're buying from discount into premium, filling fair value gaps. And we understand that from the 4-hour time frame we're bullish anyway, and the daily time frame where we have a bullish narrative because we have fair value gaps above us to target. So that's how we use time frame, right? So daily, 4-hour, M15, right? So let's just make some notes on that. Daily, 4-hour, M15. Daily, 4-hour, M15, right? In this order, right? So we have daily time frame, 4-hour time frame, and they all have slightly different use cases and M15 time frame, right? The weekly time frame, like where we started, overlooks everything. This is more of an overview in price, right? Because we don't want to be trading off weekly candles. We'll be here forever, right? So the overview is done on the weekly time frame. But when it comes to our analysis, we stick to the daily and the 4-hour mainly, and the M15 gives us our direction, and we can enter off the M15 time frame as well. We can enter off the M15. See, the M15 is a very versatile time frame. Yes, we can use it for analysis like the daily and the 4-hour, but we can also enter off it, which makes it a very, very powerful time frame. So the M15 is used for analysis, if I can spell that. The M15 is used for analysis, but the M15 is also used for entries as well, right? Entries. We won't go over that in this video because that's M15 entries are usually kept for the members, but the M15 is a very powerful time frame if you can use it, a very, very powerful time frame, and it revolves around analysis and entry like we said. Right. So I'm sure a lot of people are wondering, what's the last time frame or what's the next time frame? Well, the next time frame after this is the M5 time frame, and that is used strictly for entries. So that's where your power of three comes in, the AMD, the accumulation, manipulation, and distribution, which I've done many videos on. So please check those out as well. So this is the entry time frame. So the AMD or the power of three model is what's utilized here on the M5 time frame. So to quickly go over an AMD that occurred not too long ago in GBP USD, I did not take this trade myself, but we had a nice AMD setup over here. I believe it was yesterday or the day before of the day of recording. Yes. So we tapped into this 4-hour PY. So this is now the M5 time frame. So this is the M5 time frame. M5 entry time frame, right? M5 is the entry time frame. So now we want to understand what's actually happened, right? So the first thing to understand is that we're in a 4-hour POI. So this is where the time frames are very important. In a 4-hour POI. So we're in a H4 POI, right? So we understand this is a bullish POI, a demand zone, or simply just a bullish POI or a bullish fair value gap. We can expect higher prices from here. So we can expect higher prices from here. And that's exactly what happened. So if we quickly break down this move very quickly, because we have separate videos on this, which I recommend everyone check out. We had the Asian high get swept in terms of this is a bullish manipulation, right? It's sweeping in early buyers. Early buyers are enticed. We understand the low of the day below the Asian low because this is the Asian range. We see the Asian low get swept, creating the Judah swing or the manipulation. The Asian range or the Judah swing or the turtle soup, they all mean the same thing. And then we had a shift in our structure. Okay, so there were multiple entries at this point. You could have entered in London or New York. So you just look for a fair value gap to enter off. So we had two fair value gaps over here, one over here, right? That gave a nice trade. And we also had another fair value gap entry around about this region as well. And we just rode that into the Asian session into the next day, right? So the M5 is used typically for entries, but it's important to understand you must build a narrative from the daily time frame to the 4-hour to the M15 all the way down to the M5 before you can enter a trade on this time frame. So you have no business on the M5 before you've done your higher time frame analysis, and these are the time frames I use. So to sum that up one more time, weekly, daily, 4-hour, M15, and M5. These are pretty much the only time frames you need, right, on a daily basis. These are the only time frames you need, right? So our weekly time frame gives us a very large higher time frame outlook. Very large higher time frame outlook. The daily time frame gives us our key levels. The 4-hour time frame allows us to identify areas of inefficiency, so fair value gaps, and PD arrays. The M15 does the same as the H4, but we have a bigger emphasis on PD arrays. And the M5 is for our entries. Typically, right? We can use the M15 for entries as well, but we won't go through that in this video. This is typically how all the time frames are used. So if there's anything you want to screenshot from this video, it is this in front of you right now, right? This is essentially the roadwork to a lot of ICT entry models. So if you like this video, give it a like, give it a thumbs up, and I look forward to seeing you all in the next one.